Migereko, who has been at the helm of promoting both domestic and foreign tourism, says that the sector that has a huge potential to contribute to the GDP is choking. Increasingly, enterprises are defaulting on their credit and therefore closing down due to loans. Migereko was today speaking at the 5th Annual Uganda Bankers Conference 2022. He told bankers to simplify fact checks, saying that the bureaucracy is a disincentive to credit.
Credit. There are issues of bureaucracy. If I come to the bank, I want to get money, it takes too long. It takes too long. There is limited flexibility depending on what level you are operating at. There is unexplainable paperwork. There is over-securitization. And at times I don't want to discuss any assets I have with the banks, just like I don't want to discuss this with URA. Because when you go out to borrow, and they know you have this asset, that asset, they say, no, the lending will be easy. Bring this title, bring that title. And all of a sudden you discover that they want to take everything away from you.
The importance of preparedness of our borrowers. Banks have laid out procedures for borrowing. So it's incumbent upon borrowers to have their paperwork and other governance requirements for that funding or lending before they can access the funding. UDB has just explained, for example, that they have basic expectations from borrowers that they expect you to present before you actually approach them for their funding. So interest rates, yes, interest rates will be charged. That's the basis upon which we are paid as bankers. But importantly, we need to emphasize the readiness of our borrowers to take up this funding.
The tourism industry in Uganda accounts for 7.8% of the GDP and 6.7% of the total employment, creating close to 700,000 jobs. The banking sector needs to create special credit facilities for the tourism sector to tap its economic potential. Tourism received only 5% of the total loan portfolio that the Uganda Development Bank provided in the preceding year, despite its high significance in the economy.
I brought up this case of UDB because when I was looking at their annual report, there was a breakdown to lending. They lent 34% to agriculture, they lent 30% to agro-processing, they lent 23% to manufacturing, they lent 5%. You know, I can't even say it loudly. 5% to tourism and hospitality, 3% to infrastructure, human capital, 2%, 3% to others. Honestly, you can see where we are. We need something better than 5%.
The issue of patient capital has come out quite importantly. Commercial banks are not structured to provide long-term funding. They typically offer funding between 5 and 7 years. If you're looking for patient and flexible capital, the development banks come in handy. UDB is a very good example. They are providing long-term funding. It's patient, it's flexible, it's got more competitive interest rates. There are many other development banks that we can use in the region. There is TDB, there is Afri-Exim Bank. So borrowers who are embarking on capital expenditures that require more patient and flexible capital and lendings will have to look to development finance that gives you that flexibility and patience to allow you grow your business to a level that does not necessarily squeeze you from an interest rate perspective.
According to the data from the Uganda Tourism Board, at least 70% of the workforce in the tourism lost their jobs during the COVID-19 pandemic. 91.8% of the tourism enterprises downsized due to financial hit by June 2022. 75.2% of the hotel bookings were cancelled. A total of Uganda shillings 1.19 trillion was lost, hence a need to financially revitalize the sector. Bedson Mumbere, Smart 24 TV, Business Today.